All the economic news today is doing little to help gold prices. Joining us today from the floor of the CME is Bill Baruch of II Trader. Bill, welcome back.
Thank you for having me.
So the ECB, big news of the day here, Bill, leaving rates unchanged. The news helped gold slightly, but the metal's still hovering around the 200-day moving average here. How do you see it, Bill?
At this time, durable goods came out in a little light. Some of the hard data more recently has been softening, and I think that's been able to help gold hold ground. I didn't think we saw anything really new out of the ECB. This meeting, they kind of just wanted to kind of more hop over and not surprise the markets too much after surprising them a few months back. Ultimately, though, gold does have a lot to look at in the calendar ahead. We have an FOMC meeting next week as well as non-farm payroll, but we also have GDP tomorrow, and I think with that too, we've seen some of the GDP estimates from JP Morgan yesterday dropping to 0.4, the Atlanta Fed today dropping into 0.2. For all purposes of argument, the real estimate right now, expectation is 1.2. So this is going to miss, and that is keeping gold hovering up at this 200-day moving average. How bad it misses is going to be the question. So we like gold. I think gold is ultimately going to move higher. I'm cautiously optimistic, and I think the best way to put it is am I encouraging new clients that have not been in this move this year to buy gold right now? No, I'd rather be encouraging them to buy as the market firms up. However, I am encouraging clients that have been long and after this market hit our target near 1,300 to have some exposure here against the 200-day moving average, and I think that is good.
Well, last night, in after hours trading, we saw gold move up to $1,270 an ounce, but unable to hold that here. So, is it that the bears are still in control here, Bill?
I think what we're seeing is relief from that 1,300 level being tested, and you're seeing some profit taking on that move back. As well, there was some risk premium ahead of the French election. Some of that has come out, but I really do like how the market's holding the 200-day moving average. Yesterday, it was very interesting because the equity market, though it's still very elevated and even elevated in its near-term range, pushing to new swing highs, retreated quite a bit in that hour that we saw gold move higher. So I think it's also something to take note is that if the equity markets start to fall back a little bit, gold is going to perk up quite a bit. And we have a lot of earnings after the bell today, and I think that's something to watch, especially with the GDP on Friday. What comes out with tax policy? What do we see there? Next week, if the Fed even talks about stock valuations again and how high those are, that could also, encourage the stock market to move down. And that, again, would put gold moving higher on that. So I think that's something very interesting to watch as another factor that could help gold.
Now, I know I keep harping on this, but offline you were mentioning that should it close above 1,300, it would hit that coveted golden cross. But what are the chances of this really happening, Bill?
I do think this is going to happen, and like again, am I sitting here pressing this market right now, thinking it's going to happen here today or tomorrow? No, I am cautiously optimistic. What I do mean by that is I think that gold can get out above 1,300 in the second or third week of May. With that, it's going to need a catalyst, and again, I mentioned a few as well. There is still the French election the following week, and that's not a definite of a result at the moment either. So I think there are a bunch of catalysts out there. If gold can move out above that, that's the big resistance and our target that was hit prior, which is the 2011 all-time high, comes in about 1290. That's a trend line from there to here that's been keeping this market in check. Be below the market, we do have the 200-day moving average that we've been talking about, but below there and trailing it is the 50-day moving average. That is moving higher. It's at 1251 right now. So if we get that move above 1,300, then the 50-day moving average is going to cross above the 200, and we're going to get that golden cross. I think the market could really lift off from that.
All right, Bill Baruch, thanks so much for joining us today.
Thank you.
And thanks for watching. We'll have Jim Wyckoff up next.